Hello and welcome to episode 49 of the Money Talks. And today we have a very interesting guest. Simply because, there's a very famous quote that Steve Jobs, he made at a convocation ceremony at Stanford, where he said it's impossible to connect the dots looking forward when I was in college, but it was very, very clear looking backwards 10 years later. And again, you can't connect the dots looking forward. You can only connect them looking backwards. Now, that is true, I believe, for about 99% of founders out there. And then you have the 1%, the 1%ers like Ujjwal, who seem to be connecting the dots going forward. And his story of how and where, how he got to becoming the founder of WealthDesk and the kind of measured and very deliberate moves he's made in his career are definitely something very, very interesting to talk about. So I have always believed that luck is when hard work, preparation, and perseverance meet with opportunity, and Ujjwal is definitely the poster boy for that mantra. So it is purely sheer conviction that has got this guy to where he is today. So without further ado, Ujjwal, welcome to the Money Talks.
Hey, thanks, Anirudh. Yeah, thanks for that. I think even when I look back, I mean, at times it feels like, I mean, actually it worked the way you want to move in your life. So, yeah, pretty exciting. I mean, much more than that, I mean, I think it's also about the fact that uh, some decisions could go the other way, but it works very well. So yeah, so thanks for that. So for me, I mean, I'm Ujjwal Jain. Hello everyone. I'm the founder of WealthDesk, and WealthDesk as a platform is all about bringing equity investing to a larger retail investor base in India on top of broking platforms. So we enable portfolio-based investing. About me, I am born and brought up in Calcutta. Moved to after my engineering in computer science, I moved to a Wall Street hedge fund where I worked for first 4 years, and then for some specific stint moved to Mumbai, then moved to MSCI after that, and then gradually started up in Mumbai. I think we'll be talking a lot about that, so I'll not.
Absolutely.
Uh,
But Ujjwal, I mean, before we even get into this conversation, what is it about these Calcutta founders? They're either feeding you food or they're managing your money, right? So, and we've had, you've got the wow momos and the chai breaks of the world coming out of Kolkata, and then you have Vivek and yourself. You have obviously you have fantastic entrepreneurs and angel investors like Abhishek as well. But what is it about Calcutta? Like, it's got a very interesting flavor of the kind of startups coming out of it.
So food definitely I can say. I still think that Calcutta food is can really make like is really something which is very unique, and I don't see even Delhi comes, but I don't want to get into that debate. Yeah, but yeah, and the other thing on the wealth creation, I think culturally Calcutta is a very interesting city. I mean, this is one of those cities where, I mean, till you don't get out of that city, you are in a cocoon. You couple of things I think which inherently part of every Calcutta born and brought up guy who's actually been really close to Calcutta culture. I think one thing is you think that politics is really part of your life. So you really get, I mean, you realize that politics is really mainstream. So you really get activated very quickly in your life. Intellectual conversations in Calcutta is very mainstream around
Yep.
everything. So you really get into, I mean, the EQ improves a lot because you talk a lot about country and everything. Though I mean, not sure how many of that gets really puts the right impact in that city, Calcutta. But yeah, you are their EQ and IQ both improves very fast in Calcutta because of the general consensus of people talking about everything around politics. And second thing is, I think Calcutta is a very good cultural mix around like most of the Marwadis. I mean, my background is I like my father born and brought up in Rajasthan, but moved to Calcutta. Like Calcutta is like in yesteryears was a dream city to make a big break in life and do
Yeah.
something great. So he moved through Calcutta, and I coincidentally born and brought up in Calcutta. But one thing is that the general enterprise sense in Calcutta, especially in the Marwari community, is always around taking risk. So I think risk is inherent in our like DNA. I think because in Calcutta I never knew. Obviously, there are not many jobs also in Calcutta, so generally Marwadis tend to do
That's
businesses.
very
So I
candid.
no offenses, but yeah. So I mean that has been the upbringing. Like you grow up. and you're like you're trying to be academically very smart, and then around you see the people from your last generation mostly doing businesses. I mean, I am one of those actually outliers who is a nerd, who is a geek actually on the computer science side. But if you see the majority of Marwadis in Calcutta, they're good with actually managing accounts before managing wealth.
But that's what I was
So
gonna say as well. Most Kolkatan Marwadis, right, are not known for making ventures. They're very good at what we call byaj badlas, right? They're very good at interest. Interest is very important in their life, right? And but what is interesting is you're finding all these Marwadis, and Abhishek is a Marwadi, and so are you, and it's a very interesting entrepreneurial culture coming out of there, right? And I mean, I don't know if it is the generation, if it's something that you guys are trying to bring back to Calcutta. What's also interesting is all these entrepreneurs have decided to stay in Calcutta, right? Considering Calcutta is a very difficult place probably to recruit quality talent, especially on the tech side. But Vivek, all of you guys have decided to stay there. And is there like something happening in the ecosystem over there that we don't know about?
no, actually, just to as a matter of fact, we are not based out of Calcutta. We are based out of Mumbai. So we've been like totally in Mumbai. Yeah, but we've been hiring people from like say, some colleges in Calcutta, no doubt. But I think, I mean, I honestly feel there are these, especially some specific businesses can really do great from Calcutta. I mean, I think I've seen the case of Wow Momos and all. But honestly, on the tech front, I mean, especially the if you're trying to build a technology led venture, honestly I don't think Calcutta is the right place to be, as you rightly said, recruit. I mean, if you ask me
Hmm,
today, looking back, should I actually set up an office in Calcutta? I mean, we are in Mumbai, we are setting up an office in Hyderabad, we are actually setting up in Bangalore also. But Calcutta, I am not sure, because see, the biggest problem with Calcutta is Calcutta has lost its cosmopolitan nature. I mean, as a
hmm,
metropolitan city, if you look at the entire corporate roadmap of India, I mean, like the western and the southern India has taken to a different league, and NCR included,
correct.
but Eastern India is lagging behind. But I think lately things are improving, and I am really hopeful. I think it's a matter of time, because see, the risk is part of the culture there. I think it will evolve very fast. So, but I think it's also the overall corporate climate needs to improve, and I personally think tech led startups, especially in fintech and all, Canada is not a right place actually to start
So,
up.
so Ujjwal, unlike most and like you were saying earlier, like most Marwadis are known to be good accountants, and then most Marwadis that I know from Calcutta, I have done CA or they've done commerce, and they're into that kind of thing. You took a whole different route, right? You decided to go to Jadavpur University, took up engineering, right? And you must have been a really odd one out in your group, right? Like, yeah, you're a Marwadi going and doing engineering. What were the thoughts over there?
Yeah, yeah.
Why were you into engineering at the time?
Yeah, yeah. Actually, my connection to computer science date back to like school actually. So, class 6, 7, I got like through school curriculum got access to like coding actually. I started with, I think, GW Basica, like you write those 10, let A equal to some, like those standard instruction set that you write to create a program. From that day, and the Calcutta part of this whole story is the markets. So being
Hmm.
part of a Marwari family community, I mean, even if you make your limited savings, most likely a Calcutta Marwari will put some money in the markets. I mean, that's
Yeah,
fundamental. I've seen.
that's true.
So and interesting in our lives, like the markets have impacted actually personally very much, because my father went through some financial turbulence, and we came out of through by actually diluting some of our old investments in equities, which
Acha.
were taken during IPO days and all. So I was really excited about the fact that equities is an excellent vehicle to actually create wealth, especially in times when you want some source of income apart from your primary sources. So that always made me up, like always excited. I mean, I will be honest, like in my family, my mom is not that educated, but we still used to remember, like at those days, what is the price of Castrol India, what is the price of Ferrolex cables. I mean, I was like close 5, 6. I used to remember the prices of these stocks. So that mainstream stock market was in our lives. Computer science was something which my my intellect part of my life actually got really connected to, and I think class 10th I did my state boards, West Bengal board. computer came for the first time in 2003 Madhyamik, like 10th board exams, and I
Hmm.
took that. I mean, it was a very big experiment because you don't know how it will be. Because mostly, if you go
Correct.
giving your board exams, you want to have some precedence ki paper kaisa aata hai yaar. But I took computer science, and with the only objective that I really want to get into this very seriously. So and it really evolved me. So I got really good at programming. 11, 12 was natural that I want to take science because प्रोग्रामिंग का कल्मिनेशन इंजीनियरिंग में होता है so by in 11 12 I was clear I want to take up engineering and only computer science engineering. So that's all like natural calling came in. So my parents always never knew anything about engineering. I mean, honestly, till date, if you ask me what I did in Jadavpur, so they might say computer science. I mean, they really know about chartered accountancy, they really know about markets, they really know about
I
lot
like
of like
every Marwadi would write about
yeah,
CA and yeah, correct.
yeah. So
So
but I took
and
my
then
yeah,
yeah, go ahead, go ahead. You're
yeah,
saying
sorry.
something.
No,
No,
no. So
go ahead,
that's
saying.
what. So that's how I took up science, and then like I couldn't get into IIT. So for the computer science stream, so I took up Jadavpur. It was like a natural calling. Being in Calcutta, Jadavpur is a premium college. So I took that call. I'll study computer science here. I got a rank which I could get there. So that's how it all started. Like
And then it seems like then you decided to change tact, right? And you went right back into finance, right? Because if you started with DE Shaw, after MIT, but you also did your CFA after that. But usually somebody coming out from an engineering college would, and especially at the time in 2009 when you graduated, Infosys, Wipro, these were the places you immediately went, right? But was it a plan? I mean, knowing you is probably a planned move to move to finance. But what was the thought? Like now changing tact and getting into finance.
yeah, so the engineering actually completely opened my mindset around how computer science can actually build scalable systems and I'm computer science is very I mean is one of the streams in engineering which opens your problem solving skills, logical thinking, how to build large scale systems like of Google scale and all.
Hmm.
So that opened my mindset, and obviously I told you markets was something which always fascinated me. So during my third fourth year I realized that though academically I was very strong, so and I've done some research papers and all like engineering design automation, mobile ad hoc network in wireless networking. So I've done intense
Oh
computer
wow.
science stuff. Yeah. So I was clear that it will I can culminate all my learnings in computer science and market. So instead of taking actually Google, Microsofts of the world, we actually I skipped all of that. I simply sat in D Shaw as a campus placement during those days, like Goldman, D Shaw, Credit Suisse were one of those companies where they hire computer science engineers with the only mindset to actually create high impact products in the capital market segment or fund management or any other places.
But the Indian market was not that mature. I mean, if you go back to the time when even today, I think we're still a few strides behind where the US markets, because liquidity in India, especially for option strategy, is not beyond 1 or 2 months, right?
Right.
I mean, if you go to the US, you got the leaps and everything. That then there's a lot of market making happening. India, in that sense, is still relatively nascent towards these advanced strategies. But you like you said, it was a planned move. Like, what were
Yeah,
you
so
thinking? What was
these
the thought? Yeah.
opportunities are for global markets. So these opportunities were
Huh.
for global markets. So actually, that's the most exciting part. That right after engineering, and I joined D Shaw post crisis. You can imagine a Wall Street hedge
Correct.
fund post crisis. Your all the anxiety that whether they will survive or not. But actually, D Shaw did phenomenally well post crisis. Actually, very smart fund managers actually. So I joined DShaw, and that was a different like life. I mean, it was completely transformed the way I looked at markets from a computer science point of view. I mean, DShaw is one of those hedge funds run by actually computer scientists. DShaw is a computer scientist actually,
Is this from
and
your days
yeah,
at DA Shaw?
this is my first day at DShaw. Yes,
Oh
in
wow.
Hyderabad campus actually.
Acha.
So DShaw
And
is a
I mean,
very big opportunity.
I've worked with one of the D Shore downstream funds, as a consultant, but this was in a different space altogether. But like you said, highly professional, very like well organized. You could also say them they know what they're doing, right? And they have
Right.
the kind of capital to back it. So what was it like? Which markets were you looking at initially when you got to D Shore?
So actually, I was working at the epicenter of the hedge fund operations. This is treasury. So treasury is actually like a function in a hedge fund. You know, hedge funds are highly leveraged. So
Hmm.
their alpha seeking is built on the capacity to actually use capital in a way that they can build highly leveraged strategies using margin funding and all that. So treasury plays a very critical role there. For example, if you have 30, let's say at that point, let's say 35, $36 billion of AUM D Shaw used to have, and on a leveraged basis, the exposure might be 200, $300 billion. I mean, because of margin trading and margin investment. So I was part of a treasury team which used to actually drive this entire function, where how do we optimize our capital, the funds that we deploy across all brokers in the world to invest in strategies. So this platform, actually the treasury platform, actually mimics the entire the margin agreements that we have with all the global counterparties, right from Barclays, Deutsche Bank, and every other big prime broker in the world. So they do go into a prime brokerage relationship. And interestingly, treasury deals with all the asset classes, all the geographies, because hedge funds are trading across the world. So for that, I got exposed to all the top prime brokers in the world. I used to see how their margin agreements are created for providing margin funding on their investments. So from an asset class point of view, exposure from like first level equities to seventh, eighth level derivatives. I mean, across over the counter products and all across geographies. So from day one, I was like completely into and as you rightly said somewhere, that we are US markets are pretty advanced. I mean that way. So I mean, even if today if I look at it, the what hedge funds are doing in US markets, I will be 10 years ahead than
True.
India. So not just liquidity, even the kind of instruments they create, like the first level, second level, third level derivatives that they create on mainstream primary instruments. I mean, it's pretty crazy. I mean, and if you are trying to mimic all of these to manage your funds across the globe, you can imagine the kind of exposure we had. So treasury was a core platform, and post crisis fund management became a very critical component for any hedge fund, and D-Shaw did really well. And we actually pioneered a lot of things in that phase post crisis, and that led me to actually do a lot of exciting things in the treasury team. And interestingly, because of my inherent nature to do exciting things from scratch within D-Shaw, like as an entrepreneur. So what happened? D-Shaw did a JV with Reliance Industries in India. So to do actually proprietary trading and then get into institutional brokerage. So this was a time when Reliance actually couldn't get into maybe banking route through mainstream channels, so they took capital markets route and they did a JV, interesting JV actually, with a Wall Street hedge fund and an Indian conglomerate. And for that, D-Shaw handpicked bunch of people out of like multiple offices, and I was actually coincidentally handpicked as part of the core technology, the team which
Oh,
will
wow.
build the entire prop desk out of Bombay. And that's when actually I moved to Bombay. This was, I think, 2013, exactly 8 years back. I moved to Mumbai. So and this was this was like my gateway to Indian markets. I mean, so within
But what,
D-Shaw
how are
setting.
you explaining this to your friends? I mean, I don't see how this you could ever explain this to friends and family. Or what were you exactly doing?
No, actually, I mean, if you ask me whether that move to India was like move to Mumbai, Indian capital markets, there was a lot of anxiety. I mean, like especially working in a global setup, trying to do some of the most complex things. Suddenly, you are in Bombay in an entrepreneurial environment, and the craziness of Mumbai, like, and the fact that Indian markets is not that matured, which all of us know within
Yeah.
D-Shaw. So whether you'll be doing something that exciting. So it was a anxious call, no doubt about it. I mean, but in the long run, if you ask me, I was the best move I've ever made in my life. So within D-Shaw. So when I moved to Bombay, it was not easy. I mean, especially like it was more like a startup environment, and Reliance's culture and D-Shaw's culture like all amalgamated into that JV. This was a office behind National Stock Exchange in BKC, and that I actually stayed near BKC only. So most of the time was in office, like we were trying to do something actually as
And
an
let's be
entrepreneur.
honest, the shop pays well, right? It must have been a great time to be,
Yeah, D-Shaw
rolling
pays
in the
well.
door.
I mean, yeah,
Yeah.
D-Shaw definitely pays well. Yeah, if you are a
And so,
great, yeah.
and then obviously your parents must be really happy. And then suddenly you decided one day, you know what, I'm going to quit D show and I'm going to go join MSCI.
No, that actually JV got actually shut down on a very different
Acha.
note. I mean, and
Okay.
and and what we did within D-Shaw as a treasury platform, which we were talking about, D-Shaw spawned off as a separate company called RCCM. It was like treasury
Okay.
platform as a service. Now open to all the hedge funds in the world, in which Blackstone took a stake and all. And I was asked to move to that business because JV was supposed to get shut down, and they told that it's a great opportunity to work in global setup again. But by that time, I was clear I'm not going to leave Mumbai now. I mean, I really want to stick to Indian markets because there's enormous opportunity to do in India. I mean, at least at that point when I was, this is 2014, 13, 14. I mean, fintech as a buzzword was picking up in payment lending to an extent,
Mm.
but capital markets, just leave the B2C businesses, which is exciting. The institutional part of the financial capital markets was so exciting to look at, whether you talk about institutional brokerage or pure play prop trading. There was so much of opportunity that I never wanted to leave Mumbai. So, but I never knew that what is the next thing I want to do. But interestingly, at that time, because the JV was being shut down, the MSCI actually was ramping up India operations, especially in Mumbai. And somebody got me connected to a guy in Geneva who was driving the index business, so from MSCI globally. And he told that we are ramping our Mumbai operation because index is becoming a very fintech problem now, where
Mm.
data,
What does that mean?
product, risk.
Index is becoming a very fintech
So
problem.
index actually, if you look at from an MSCI business point of view, index is a data service. Like if you create an
Mm.
index, you open the feeds, and then some AMC will create an ETF out of it, or somebody will benchmark their portfolios against your indices. More like a data provider. But when this
Correct.
indices actually the needs of the market, whether it's a hedge fund who's looking to compare to a more sophisticated index, or unique ETFs needs to be created. Now, if you look at global markets, interesting ETF, ability to have a very faster turnaround to create this index for the market, and ESG was becoming mainstream that time,
Uh-huh.
especially global markets. MSCI wanted to become a very tech heavy company, like which can actually build this very fastly, like on a platform model. So that was a unique move. So and if you know, in Wall Street, there's a ranking that goes like, from a technology USP point of view, which are the best financial services from. Like Bloomberg would be in top five maybe, and
Correct.
DSHOM would be in 10 top 15. MSCI was at that time is around 31, 32. For the first time, they were inducting a CTO, and this whole environment was like trying to be a very tech heavy firm. And it was an interesting move for me because till that time I was like on North Pole looking at the active hedge fund industry from a computer science mindset. This is like a completely opposite passive industry from a computer science
Correct.
mindset. So I could not get better. I mean, my adrenaline to look at capital markets from this lens has always been like always excited me. So I moved to MSCI, and interestingly, within a very short stint, because of the impact of the opportunity, I could lot bunch of smart beta indices on which some of the biggest ETFs have been launched. And these were some of the mainstream first time multi-factor smart beta indices MSCI launched, and I could actually build those from scratch very fast, working with the product research technology, and roll it out for the global sales. So we did
Very
that out of
interesting.
Mumbai. We'd launched our first low carbon credit index on ESG. I was part of that, so pretty interesting, and that actually made me really confident that, on one side I've seen the active hedge fund, and on the other side I've seen how passive is tracking trillions of dollars, and parallelly my connect to Mumbai was getting stronger and stronger. I was meeting brokers, I was meeting EMCs, I was meeting bunch of people around Mumbai to understand where the industry is in Indian context, like purely from a broking, asset management, wealth management point of view. And SEBI also parallelly was doing a lot of interesting things. You see,
Mhm.
2013 first RIA regulation came in, first draft, to build a more advisory-led distribution network in India, whether it is mutual funds or anything else. You pay an advisor, instead you make distributor making at the tail end. And that regulation is pretty interesting, which you might have seen in last two couple of years. But
Mhm.
parallelly also, on the broking side, the Zerodhas of the world were completely flipped the broking model, like from a very RM led, network led broking to a very technology led, like how payments,
Correct.
UPI changed payments. Like broking was completely getting open architecture, transactional technology. Like the Zerodhas of the world created those initial like push
Yeah.
in the Indian context. And if you see, from coming from a global market point of view, I could see the green shoots, like what's going to happen in next, not just 2 3 years, but over 5 6 years, because capital markets is very slow moving. It takes a lot of time for things to move. So
For
I was
innovations
clear
to
that,
come through. Yeah.
yeah, if you look at a longer horizon, this is a pretty interesting uh, decade actually, to actually innovate in India in a full stack model. What it means is that transactionally broking is opening up. And if you look at global markets also, broking actually is most earliest adopter of innovation, anything that you see in capital markets.
Hmm.
It's like, and so that was one green shoot. Regulator was changing things around. driving the entire or flipping the entire wealth model in India from a distributor led to more like customer paying to somebody who's making money for them. So culminate all of that, I could see that. And obviously mutual fund at that point also SEBI started to clean up, like you see the entire reclassification of mutual fund
Hmm.
schemes, capping of expense ratios, and all these are green shoots of a future which is going to be very different. Like it might sound very gray in
Yeah,
2015,
direct
but
versus non-direct funds, right? Obviously, the entire
yeah,
Grow
yeah,
platform built on that direct fund. Yeah.
yeah. So I was clear that I have to take this regulatory green shoots and take that the entire broking taking a very technology-led play. If I can combine this together in a technology-led investment technology-led model, what it means is that if I could build a platform which could integrate with this transaction engine, which is a broker's platform where you trade your stocks and ETFs and all, and on top of that create a investment technology which can take the nomenclatures of, let's say, investment advisory regulation or a research analyst regulation which SEBI has created to create portfolios which we call as WealthBaskets today, on direct stocks and ETF. And on the transaction side, make sure every broker in the country I am integrated with so that they can open this portfolios for their customer to discover and invest. And that is a complete B2B2C investment technology, because you need to enable manufacturing of these portfolios, productizing it, making it distribution ready, and obviously making it available on the consumer platform of a broker so that customer can discover and invest in these direct equities and ETF portfolios. Now, building this whole technology was a humongous problem. Like, I mean, so that's how we formally started the company in 2016. It took us 3 years to build the tech before we went live with our first
Wow,
full service broker. Like Motilal
not
was
three
one of the
years.
earliest adopters. Yeah, yeah,
And I read somewhere that by that time you had saved $1 million, right? Which
yes,
is a nice nest egg. I mean, if you went back to Calcutta, it's a nice little house, and you could again live on the Byaj Badla of the Marwari lifestyle, right? But you pumped all of that money back into WealthDesk. That must have been a
yes.
really big decision.
Yeah, so all the savings, and when we started up before that, around that time we built some tech for proprietary traders. We sold that. All that money we pumped it into this business. The idea was very clear. See, I mean, but the Marwadi tenant, I'll tell you. See, I always, when we deployed that money, see, when you buy a real estate, you see something which is physically out there. You always feel that, okay, this has some tangible value. See,
Correct.
as a technology guy, we always see tangible value in technology. So I always look at residual tech value of what we deployed on our own. Today, when I talk to, even like for our next round, I mean, I say that I always created a residual tech value. Let's say everything goes shut down, I have a residual tech value, because that's the IP, that's the value I've created, which has a real tangible value. In
But that's a
today's
very
day,
interesting word, residual tech value, right? It,
yeah,
it almost like sounds like the terminal value of an investment, right? Nothing
correct,
else happens. This is what. But how do you like? And it's very interesting because also people, let's say, not even in the wealth industry, not even in the broking industry, are building some amazing tech in India. And Indian tech, I think, is because there are so many cultures in India. And if you in India, it's like if you go 100 kilometers, everything changes, right? You got to build technology that fits the entire framework of a very, very, it's like the United States of India, right? Every single state is a country, and every country, sometimes one state can also have two countries within it. If you look at even within Vidarbha and Maharashtra, how things are
right.
different, or Maharashtra and Mumbai, things are different, and everything changes. And so when you build tech in India, it is usually very, very robust. But unfortunately, I think until recently, I would say that it's been very difficult to sell tech that did not work, right? And now I'm seeing, maybe some green shoots of what you're talking about, where, you build certain tech that a company can still utilize, or you build certain
Right.
IP that a company can still utilize. But when you came in, I don't think that concept existed. I mean, I remember some of our write-offs in 15, 16, great technologies, but unfortunately, there's no buyers, right? So how did you have this conviction that eventually there will be somebody to buy?
Because see, that's coming from our global understanding. See, I have
I
seen
see.
that when market matures, any economy matures, technology led, if the market is evolving because of technology, people invest a lot in deep tech. Like, you build
Hmm.
something which is big tech, which is highly deep into the ecosystem, and it's not easy to build that in like a quarter or a two and then start bringing numbers from a
Correct.
customer part. So you have to have that clarity that you are building a big tech. Like, let's say in our case is a direct indexing technology in the client's account on top of broking. Now you
Hmm.
can't just build it over a, even if you have enormous amount of capital, you paralyze teams, but the fine tunings are so detailed that you, it takes a lot of time to come up with something. Now you can ask that, obviously it's a big bet, like, but the fact is that globally also it has happened. I mean, obviously, like when market, as I told you, if, let's say if we take the green shoots of how broking evolved in US, and then this whole direct indexing came and all, these are all deep tech problems. I mean, some of these technologies were built in Valley, not in New York actually. So, and got sold by, got acquired by New Yorkers and all, like, so it has happened in US also. So very clear understanding that this is going to happen in India, and India will actually leapfrog, because the adoption of tech in India is very mainstream now, and thanks to government of India. I mean, the way they have institutionalized this whole open Aadhaar stack, and this whole digital lockers, now accounts aggregator, and the UPI. I mean, like the poster boy of Indian
Oh yeah,
payment. Yeah,
absolutely.
so the poster tech of Indian payments actually. So you can see that if the government is institutionalizing deep tech, if you are building stuff which can add value to the ecosystem where you are in, let's say on top of broking, working with advisors, fund managers in the country, it will work in some time. Like it will take a while. I mean, you have to be, the perseverance part is, and is very critical here, because you cannot expect that you build something so deep tech and expect outcomes in a year or two. So the tipping points are very high. And I think some of other change that we have seen on the technology front, especially in India, is that initially a lot of brands were built, especially in startup space,
Hmm.
where tech was only becoming an enabler to distribute that at scale, which is most likely not going to get replicated in a very scalable way if you want to replicate in different geographies or maybe different markets or lot. But our approach, or maybe some of these deep tech companies in India which wants to become the infrastructure play or any SaaS play. So SaaS play of building technology, like today we are a B2B2C SaaS investment technology platform. Now we started with one broker, now we are working with 30, 40 brokers at a SaaS scale. We started with one advisor. We obviously have like not onboarding many advisors like a SaaS model, which we can do. We might do in future. So getting from 1 2 partners in a year to post COVID, like to a 50 partners, that we are able to achieve because the technology is not able, not only is a deep tech to solve this entire problem of creating portfolios, distributing portfolios, but at the same time the technology architecture is built such that you are a SaaS platform, so you can replicate across multiple brokers environments, and scale very fast. So I think these inherent understanding, building deep tech, I think some of the companies even in financial services space are doing. And I think in some payment space also, people have created enormous technology to actually drive on top of UPI and all. So I think we are doing that great. I think that is why today a lot of these SaaS companies out of India, including ours, the possibility to go outside India in a developed markets also is very very easy, because we have those
But
inherent
Ujjwal, tell me
foundations.
one thing. Imagine if you had to imagine you were starting out today compared to 5 years ago. See, 2016, I was investing. I've been investing in startups for roughly about 5 years by then. Very different market, right? Obviously, today, very different market. I mean, all of these things were just starting out. GST, I mean, was supposed to come in 16. UPI was just starting out. What was it? Is it going to work? It's a government technology. Government hasn't been great in execution. All these doubts were there. But if imagine you could somehow restart today, and this was the moment you were going to start, what would you have done different today if you were an entrepreneur? And I'm again talking from the perspective there's people listening in, and they're starting out today, probably thinking, what's different now than what Ujjwal did in 2016, and what would you do differently today than what maybe you did not back in 16?
I think I could have been much bolder. I could have hired more cream
In what way?
tech talent
Acha.
from
Hmm.
valleys and maybe uh, Singapore or Hong Kong, or I mean possibly who wants to move back to India today. Actually, in 2016, I'll tell you, when I was building this technology, I knew in Mumbai getting a very cutting edge engineering talent is not so easy. I mean, I am an engineer,
Hmm.
so I know why not many will like Mumbai if they are a really deep tech problem solver. So at that point, even, and generally the perception generally was that I'm not sure India's maturity in terms of building deep tech, as you were saying. So at that point, if I would have gone to a very cream talent, let's say in Silicon Valley, working in Google, and said that come and join me and build this tech, and I know it's an enormous, it will create enormous wealth for you.
Opportunity. Yeah.
Yeah, it's a huge opportunity, and obviously it's a problem of real different scale in India to solve. And let's join. 2016 would not be easy, but today, if an entrepreneur is thinking so ambitious, bold, that I will build something which is deep tech, and I want to create an enormous market opportunity by building which is very tech business. Today they can be bolder. They have capital. Capital is like flowing like anything, and there's an enormous amount of inbound interest in India to move back. Global talent wants to move back to India, wants to solve
Oh
problems of
wow,
India.
that's unique. Yeah.
And so basically you have talent plus capital all trying to be inbound in India, and I think it's a pretty exciting time for India that way. I think 2016 it was not like that. Things have
So
changed
so
really fast.
so now, and we'll talk about the funding journey also since we brought it up. But now, if you could explain to people, what does Wealth Desk actually do?
So WealthDesk actually from a retail investor point of view, what we have been able to achieve very, very successfully is that when it comes to broking, when you open a broking account, you start investing in equities, it is not easy to actually find the right stock you to invest in. I mean, if you let's say you open a broking account, you want to create wealth from your stocks, finding those right stocks, or even let's say if you find a right stock or a sector or a theme which you are interested in, you believe there is a wealth creation through research reports, market news, friends, families, this whole bombardment of information from across the like every channel that is around, and you finally find a right stock, you might end up buying that stock, but you don't know when to exit it. And
Hmm.
and what happens typically in a broking account, if you see largely the last four crores demat account in India, why there's so much of less activity in most of the account, you see there's a dormancy ratio is very high, because most of the people start with a high adrenaline rush, feel smart, end up buying bunch of stocks because of information exchange and all, and finally they have bunch of losers and very limited winners, and that's the typical journey of a broking account. Now compare that to your other investments when you do, let's say, a real estate or a gold, or maybe even mutual funds for that matter. Your
Hmm.
approach is very different. You're trying to build long term wealth. But when it comes to broking, because of the inherent real time market data, the
Yeah.
enormous amount of moves, it's not easy to create sustainable wealth. So what we have essentially been able to do is that we have opened these managed portfolios on the broking account, and these portfolios are managed by some of the most incredible fund managers who actually are good at what they're doing. So whether it's a long term portfolio, thematic portfolio, sectoral portfolios, multi asset portfolios on equities, ETFs, these managed portfolios are out there on broking now, which you can understand. Now your empowerments will still be that I am interested in this theme or a sector or this long term momentum strategy, or whatever it could be, or it could be like India US kind of multi asset portfolio. Instead of trying to find individual stocks, you end up buying this well basket, and the underlying constituent underlying stocks get replicated in your broking account. So the underlying holding sits in your broking account, you just replicate it in your account as per the weights defined by the fund manager. And not only that, once you are invested, your regular updates on the portfolio, when if there's any exits needs to be made, or weights change of some quantity in some particular stock in that portfolio, that is pushed by the fund manager through our platform, the portfolio manager, through our
I
platform. So
see.
you get to see the in one snapshot the biases that you need to do, and you just do a one touch approval. So you are still empowered to actually make your investment moves in markets, but you see we have inherently created a very process oriented, cutting the behavioral bias of finding stock, exiting stock without knowing when to do that with well basket. So what has happened is first time investors, seasoned investors, dormant accounts, all are seeing the excitement of sustainable wealth creation through these portfolios on broking account, which was not possible in the past. So we make
And
that available. Yeah.
and this sounds very much like it's something that even Smallcase is sort of doing. Is that your biggest competitor today?
Yeah. So small case, and we started like becoming a mainstream comparables. Like I think when small case moved to B2B2C business model. So we are inherently B2B2C by design as a platform. We've been like started.
Acha.
We've been doing that since 2020. We have not done direct consumer yet. Like I mean, we still
Okay.
our consumer. Most of our traffic is inside the brokers app where our platform sits. But so small case started with Zerodha, and then they moved into B2B2C. So yeah, conceptually small case and well baskets are similar thing from a retail investor point of view when it comes to investing in curated portfolios.
I see. I see. And so today, I mean, this may be a bit of a dumb question, but just for the sake of so that everybody has a chance to explain this, what is the typical portfolio size or your target customer's portfolio size? Is this a guy who has 50 lakhs in wealth? Is this a person that has a crore in wealth, how much of their exposure should be in equities for it to make sense for this, person to be signed up on Wealth Desk?
So actually, we solved one of the most unique cases. Now, this is the part where I will bring your like parallels to what you're saying. That India is a country where you have 27, 28 like states itself. These are our countries within state. They are countries. Now, being a SaaS platform and being working with the most unique broker demographic segment, like working with the full service brokers who deal with like very ultra HNI segment to a discount broker like a Paytm Money, which tries to promote wealth creation at a very peripheral level, like people who have never seen how to make wealth out of equities. So we serve both from a technology standpoint. So we have accounts who are actually investing a crore, 2 crore in a wealth basket to an account where they are starting with 1,000 rupees. So from a
Wow.
platform point of view, adoption rate is from a 1,000 rupees account to a 2 crore rupees account. We serve both the segment very well. On a full service broker platform, our technology is driving that kind of market reach. So the average ticket size could be 3-4 lakhs. On a discount broker model, where the focus is to actually penetrate broking to a larger India or the newer India, millennial India, where the average ticket size could be smaller, which in the ranges of 20-30,000. So from an investor point of view, if you have 1,000 rupees to invest in equities, or if you have 2 crore, I mean, Well Basket works for both very well.
But like you said, it's very interesting. You've got, as your brokers, you've got Motilal Oswal, JM Financial, Anand Rathi. You've got even discount brokers like Paytm Money, Zerodha, Upstocks, etc., etc. And you're trying to create a win-win for all of them. Now, some of these guys are full-scale brokers, right? Where they're not really trading or competing on price. They're really trading and competing on their brand value and the fact that they have the best researchers out there, and they're able to provide the best advice, and they're using you. The discount guys are using you. In fact, you've got Zerodha as a B2B 2C client who's got Smallcase. How are you creating win-wins for all of these different classes of brokers out there? I mean, it can obviously cannot be the same that you do. I mean, it cannot be a same win-win that you have a Motilal Oswal that a Zerodha would have, because the underlying technology is the same.
No, so yeah, so that's the where the B2B2C part comes in. So if like a full service brokers might convert their own research into well baskets also, and also
Okay.
bring in third party advisors from our platform into their consumer ecosystem, and create a more comprehensive portfolio suite to serve different market segments, so that they are able to do very well. Now,
I see.
as you pointed out about the pricing bit of like they are trying to create value in the client's account because of their inherent full service nature. Now, there the consolidation has happened through our technology, where your research, your advice, your third party partner research advice all get culminated into form of wealth baskets. And from an end customer point of view, create a more holistic journey to achieve their asset allocation. So these full service brokers are able to do that really well on our platform. And when it comes to discount broking, actually, interestingly, discount broking transactionally, they are not making any money. I mean, broking as a business for delivery cash for discount brokers is zero business. So for them to actually enable their customer to actually create wealth at scale, where your unit economics need to be really very good competitive, because you're not charging anything on your broking, so you can't charge much on your wealth creation side if you want to open it anything. So because of our technology play, the wealth baskets gets available to on top of discount broking platforms, and customers who are sensitive on their transactional cost, so anyways they don't want to pay anything, they are paying now because they see really value in this
So
portfolio
true, right?
which
Most Indians don't want to pay for anything, but they want everything.
yeah, so that's how we are actually. So
But
these yeah.
to your point though, I mean, I here's something interesting, right? I opened up while we were having a conversation pre-episode last week, right? I opened up a Wealth Desk account, and I went to the Wealth Basket screen, and what was very different than what I guess a small case had was that you actually charge for each basket, which I found very interesting, right? So you were saying that this obviously has a lot of value in what I'm doing. I think, but small case usually their baskets are free, right? Now that's a huge differential in the way of pricing this product. So what is different that you are charging for a basket while small case says this basket is free?
I think for us, we have never created baskets which are well baskets which are free generally, other than few ETF portfolios that we have gone
Correct.
live, which are free in nature, around like Giants of India or like gold at equity, which are portfolios for the larger India. The the fact these are charged, there's a fee to be paid on these portfolios because these portfolios are created with enormous amount of research, like, and you pay a very nominal fee to actually create sustainable wealth. Like on mutual fund, though we most of us pay the expense ratio which is implicit into our cost, so we are already paying as a country, like it's just that they
Correct,
are
very
implicit.
true.
Now as SEBI moves things on the customer facing front where you get customer is basic paying directly, these fee based portfolios become mainstream that way. Now the thing
Mm.
is why customers are paying, because they really see value out of it, because they see that now if I invest in this portfolio, I'll be systematically making wealth in the long run, and these are managed portfolios, so I need to pay the manager for that, and they are paying for it. Now we have also recently
But
launched something
but
called as a user.
what is very interesting as well is how are you convincing them to pay? See, this is a again, because you see most of the audience is founders, right? And I've always just like you believe that if you are providing a service, if you're providing some value, you need to charge a price. Now that's one of the inherent arguments of the Indian ecosystem, probably even from the value side, that people want to give everything for free, right? But then they want to create value, but you're not charging anything. So I don't know how to create value out of that. And you come and you're saying, listen, in India, as it is, people believe research की कोई value नहीं होती है. Like it's an inherent research. You get research on CNBC, you get research on all these different platforms. It's available, right? Gyan is available, tips come for free, etc., etc. But here you come along and you say, you know what? No, research is actually got value, and you need to pay for it. And if you want good research, you should pay. How do you convince your customer on that without individually convincing each person? See, you're doing it online. You're not like
Yeah.
saying, okay, Ujjwal is not picking up the phone and calling each and every client and saying, listen, there's value, but you're inherently communicating that. How are you doing that? Because that's a very important lesson for founders listening in.
So in case of our platform, I think we have different market segments. So let's say a full service brokers might be serving a client which is starting with a 5 lakh, 10 lakh rupees, and they have an assisted layer which through our technology where the RMs can talk to clients. So they are actually understand that okay, you were doing mutual funds, you were doing PMS, in our overall asset allocation, WealthBasket fits in these places, and you should go ahead. And some of the top PMS firms are actually moving into RIA model through us with WealthBasket. So
Oh,
that
interesting.
that credibility is being built. Like some of the top PMS firms, like an Abacus, would have joined us, and under RIA they have launched a 5 lakh portfolio. So that also makes customer feel that there's this premium portfolios which actually was not accessible to me is available to me, so I have to pay a fee for that, and it's a nominal fee, and I'm more than happy to pay. See, in our case, lot of this conviction from a customer paying is happening because of accessibility bit. It was not accessible. These kind of premium portfolio segment was not there on broking in India, so that's why. And research in yesteryears was a very was not organized. The dissemination and ability to create sustainable wealth on research was not simple. Now through wealth baskets, it all gets organized into a vehicle through where you invest and you see your returns in a very organized way, like a mutual fund or a PMS. So
Hmm.
that customer is able to understand this experience, and they are gradually realizing that we have actually seen that people start with one portfolio and they end up buying four portfolios to serve
Very
all their
true. I
investment
could
needs.
see that.
And the paying bit is happening because of two reasons. First of all, that we have created a new category, so people have realized that the accessibility of this is happening because of the enormous technology that we have built in the back, so the managers would come and serve a larger retail community, so they really appreciate that part. And the second thing is that the performance, I mean, if you start with small amount, when you see you're systematically making money, which is not easy in broking accounts because of thousand reasons, behavioral biases and all, which is happening, so eventually people are becoming a more, the LTV increases very fast in that case.
And how are you building a brand name for yourself? Because obviously, right now, are you white labeling it, or do your customers know, even buying through Motilal Oswal, they're buying a wealth desk product?
So Wealth Baskets as a vehicle is pretty much branded across all brokers, and
Okay.
across all our consumer channels inside broker, our brand is out there, like powered by WealthDesk. Or like if you see like a Paytm Money product, like Paytm Money Wealth Baskets, like it's completely labeled through our brand. So yeah,
Acha.
as a category, it's like across. Yeah.
I didn't even realize we're 15 minutes in, but we've not talked about your funding journey so far. So we're going to go a little, I'm going to change track very quickly. And 2016 you start, right? And India
Mhm.
is seeing all kinds of crazy funding scenarios and et cetera, et cetera. And interestingly, you're in there pumping your own money. You've pumped in $1 million. You've talked about it in the media a few times, and you decide not to raise any money at all for 5 years, right? Did you never go and pitch, or was it like you said you were always too early, or you weren't ready to pitch? Like what was it? What did it take? Why did it take you 5 years to go raise your first round of capital? Fantastic round, by the way, but why did it take 5 years?
So 16, 17, 18, 19, we never pitched to anybody. We were clear, like we
Acha.
want to build the take, build the product market fit, and then go out. So that we were very clear. So we never pitched, and that was there's a fundamental reason because in 2065 I've gone to a VC and told that I'm trying to build a parallel equities portfolio investing experience on top of broking. So VC will say mutual fund penetration पे इतना बुरा है we focus on that build a brand around that. I mean if you see a lot of mutual fund investments has happened during that time, but that was the FOMO at that point in
Correct.
markets. If there's any area where you can excitingly do good things apart from discount broking technology was do mutual fund brand,
Mutual.
like
Yeah.
build a distribution brand. But we were clear that we don't want to get into mutual fund play. We want to build a full stack investment technology, create a vehicle on top of direct equities ETF through using relevant RIA license, build a SaaS platform. Nobody would understand that. I mean, honestly, and because you are saying that I'm not gonna give you customers or revenue top line in next 1 year, 2 years. So I think it would have been a bad move. So because patient capital was needed at that point, and patient capital can only come if either somebody who, let's say, if I would have gone global and asked somebody because they would understand, okay, how things would be in
True.
2021, or the other is I put my own money. So we put our own money. So that way we didn't pitch to anyone till 2019. We got a good product market fit in 2019. Full service brokers started joining us every 3 months. We are going live with one, and we our SaaS velocity was building up as a B2B2C platform. So actually, just when we decided we'll raise our first round, actually COVID happened. That's around one thing became very clear that now we have built the product market fit. We have a very high velocity B2B2C growth, which is very difficult in India, especially as a SaaS business in capital markets. Like totally, you cannot like it's very surprising to feel even like we've been able to do that. So we realized that it's a time to now go all out, get aggressive. But because we were looking to do our first round, so we were clear that we won't take a VC route. We'll try to find a somebody who believe another 5 years of decadal like story in this business in terms of how it will scale up now, because now you have crossed your entry barrier, you've crossed your product market fit, you've crossed your product market fit in a way that everybody is deploying your technology and you are trying to become a category. So we that's when we realized we got culturally connected to Matthew Syriac. I mean, and he was interestingly working on a similar deal in this space in different value chain in the same pipe, and we got corrected by someone, and it just happened that he said that I believe in this vision
Ujjwal,
from
you've
a
just
long
done so many things differently. I mean, this question's playing in my head, like people like you must live by the sword and also die by it, right? Because have you ever felt that? Anyone ever told you that?
no, I mean obviously that's what I mean. People have told like it's a
Because
like
let me phrase it better. Also, I'm not. You have very strong conviction in your ideas, and when you obviously explain it, it makes sense. But what happens sometimes, most of the time, at least many people believe that when you're founding a company and trying to do fundraise, it's all about going with the flow, right? And your kind of a perspective is very different, right? And honestly, I think that's probably why you are where you are today, and you've got this very differentiated kind of an offering. You're able to charge for things that even competitors in your space are not charging for, and you've created a pretty very interesting company for yourself, right? In first round you raised $3.2 million. It's a very, I mean, it's a commendable round as a first round coming out, right out of the gates. So in that sense, have you ever felt like those moments when you're like, maybe it's at 12 o'clock at night and things are not working out? You're like, yeah, Shaya, maybe I'm like, am I just going the wrong way here? Like, how do you keep convincing yourself you're on the right track?
no, actually we have felt about it a lot of times. I mean, one of the things which has kept us like awake a lot of times where the fact that are we not going too far? We should go fast. And
Fast,
one
yeah,
way could be
true.
to deploy more capital, scale up, allies, and all. The other was the fact that uh, in similar space people are taking enormous amount of VC funding, so should we also just get into that groove and take a high velocity capital and just go fast? So all those things have been, and it could be that, I mean, today if I could think that I made a right choice or I made a wrong choice, I don't know. I mean, honestly, I could technically can't give a clear answer to that, but that is a inherent dilemma that I think every entrepreneur goes through. But as you rightly pointed out, one thing is that we were very excited about what we were building. I mean, honestly,
Okay.
that that constant excitement that we are building something really cool, like like I can't be more colloquial about it,
No,
is something which is
it's
deep
so
tech.
glad to hear that. It's because it's very rare to find that kind of conviction level. Because you know what happens is, you have your friends and everyone's out there raising money, and you know उसने भी 50 मिनट उठा लिया, उसने 100 मिनट उठा लिया, वो इतना हो गया, वो इतना हो गया, and you're sitting around having a beer maybe one night, and you're like, यार, what am I doing, right? मैं तो किसी से पैसा raise नहीं कर रहा हूँ आज की date में. And
Yeah,
it
yeah,
can
it's not
change
easy.
your mindset, right? It can,
Even
it's very
the
difficult.
people who are with you from early stage, my team, I mean, I'm like utmost respect for my early stage team who are with us since day one. I mean, they could have technically seen that there's so much of capital velocity scaling up around and why we are not doing it. I mean, I have gone through all those conversations, and every single time, everybody was equally excited. Yeah, Ujjwal, we are building something really cool. So why,
अच्छा.
if we want to raise capital, let's raise capital at the right time. So everybody, so the environment was that we were really focused on that one vision, that let's build tech, that build the platform and go out in the most, and understand the space where we are in. If you just build velocity basis, infusing capital and doing high, look to grow high faster, it doesn't work out, because our space, the money that gets into your platform, it's a very serious money where customer is looking to create LTV through wealth creation and all. You can't just simply solve that problem in one, like overnight. So it's a long journey. I mean, even today, if you say that people are taking AMC license, I mean, there's 30 AMCs out there. Why were they? Because they might be looking the complete AMC play from a first principles thinking, that we'll just simply drive a technology led AMC which is solving, bringing funds at such a nominal cost, and obviously platform like WealthDesk can create such an enormous distribution channel. So the first principle thinking on which we have always worked is that we want to build a technology which is a SaaS scale in a B2B2C model. We know the market opportunity, and when at the end consumer level there's a funnel is growing really fast on the broking side. We know at some point when we flip the coin and go take a high velocity, we'll be able to do it as long as we know where
I
we are
see.
incrementally moving to. So that kept us really sane most of the times. But yeah, obviously the craziness and the media mentions of people raising money like crazy and all, that's, I think entrepreneurs
Yeah,
really
small case
need to
becomes a
know.
unicorn, grow becomes a unicorn, they start acquiring other companies, right?
Yeah, grow becoming a unicorn, it's an interesting case actually. Yeah.
Chalo, I'm gonna ask you a couple of questions because we've hit that 56-minute mark, and I don't want to keep you awake at night. I'm sure you're one of those guys who codes at night. But let's talk about the journey. If you could turn back time, right, and imagine you did answer this in a way, but what are two things that you would change about the journey? If you could redo this back from 2016, you say, what, two things that I could change that maybe could have had a much more bigger impact here today.
I think one would have been that maybe we could have slightly reduced our minimum viable product expectation. That initially we thought we'll do it like this, and then we actually ended up doing that. So which took a while to be really right.
Acha.
I think, and that is because of being a first-time entrepreneur, you fail a lot. I mean, I will be very candid about this fact that the ability to precisely identify what can actually really create value in the customers, your target market, I think there, because you think from a completely from a lens that you think this is needed by the customer if they want to really get successful with the product, and at times you realize that actually they could have done with something which was far more like limited compared to what you're building. I think we did not do that well, so we delayed a bit there. So I think we could have solved that really well. The second thing is that maybe I could have been more aggressive in building the team. It does not matter, bootstrapped also I could have done that. We did a bit incrementally, knowing, thinking that like we need to hire only right people, like culturally
Correct.
right, like skill set wise right, they should be compatible. At times actually you need to experiment in areas. I mean, today we are experimenting like maybe, but when you start as an entrepreneur, a lot of these places you actually end up being very calculated, and I think we need to fix that. I mean, we should fix that. Other thing, I mean, apart from that, I would think that uh, I think have a very broader horizon in terms of where you want to be in 5 years. I mean, it's not just about solving the next quarter, but you have to have a like, especially for in our case where we're trying to build a 5 year play where we want it to be. We actually uh, where actually we knew where we would be in coming time. We could have accelerated a bit faster, because we accelerated, let's say in last 6 months or 1 year or 1.5 years, we have accelerated more, knowing very well where we are, I could have done that acceleration faster in 2017, 18 also. So I think it all depends. Like if you are clear about your thought where you want to be, and you know that there's somebody who's backing up as a customer or even as a capital, I think, and even as a people who want to be part of your vision, I think take that bet because the evolution of any businesses in India now, especially in such a heavy tech-led environment, so fast. You really need to be as agile in that thought process. So yeah,
So if I may summarize, you're saying the two things to do is first of all, get to your minimum viable product quickly and
quickly. Yeah,
iterate quickly, right? And second thing is that hire the right people and hire them quickly, right? Again, I mean, I think both of them are about velocity, as you kept saying,
yeah.
that it's about getting those people in quickly because they will, when you get the right people on board and you're working on iterations, right? Both things need to go hand in hand, and that will lead to the end result getting there faster. And like you said, I mean, maybe the second question flowing from that is that where do you see Wealth Desk in the next 5 years?
So in the next 5 years, I think we are almost like now we are in a much bolder vision as a technology because we've been able to establish ourselves. So on top of like entire transaction engine, which is broking and other transactional platforms around other asset classes, so we sit on top of that like a UWI, like a United Wealth Interface, on which you have wealth baskets and when wealth management become internet scale as a platform, we'll be able to bring this wealth solutions, premium wealth solutions to a larger retail community in a very efficient way through technology. So I think that's where we will be. I mean, so I think that's what we're focusing on.
Ujjwal, it's unbelievable that you and I have had no chance to take anyone's questions. We've spoken for 1 hour, right? So I think before we'll let people ask questions in the comment section over here right now, but why don't we go straight to rapid fire? And then if we have a couple of minutes at the end, we'll take some of the questions from the audience. And there's a couple that's already come in. Can I go ahead and take you through rapid fire? Rules are very simple. I'll be asking you a set of about 8 questions. Whatever first comes to mind, just blurt it out, and usually that leads to some more, deep, full insights. And knowing your contrarian nature, there's going to be some very interesting answers that I am looking forward to tonight. Are you
Sure,
ready for that?
let's do it. Yeah, let's do it.
So, first question, and so Elon Musk, Jeff Bezos, Bill Gates, Donald Trump are coming home for dinner. What's the plan?
I think I'll ask Jeff Bezos that what's your plan to actually get into electric cars, man? I, I, I mean, I think out of all, obviously, my fascination will be for Jeff Bezos. So I'm just hooking myself to
The,
Jeff
the,
Bezos.
the other the other three can just talk to each other.
Uh, yeah, I just say, Jeff, can we sit aside and have a couple of beers? I'm really big fan of Jeff Bezos.
Wonderful. Let's see. The second one, name one mistake you believe every individual, not just founder, but every individual must avoid.
Must avoid.
Must avoid.
I think delaying, which comes out naturally, like people delay a
Procrastination
lot.
is. Ah,
Procrastination. Yeah, I mean, we are moving from survival to passion economy. I mean, as young entrepreneurs, young individuals, especially the young population. I mean, we should take risk very quickly, man. I think we
so
do that.
how do you overcome that procrastination? What's your strategy?
Believing in yourself and taking small steps. I mean, I have done that like in ways and forms, but yeah, taking small steps, it's not a, because see, eventually people, I mean, most of us think that we have to start very big. I mean, and it does not
Hmm.
matter, man. You start small, incrementally build, because you are still progressing every day. So I think that's how I have solved a lot of problems in my life.
Yeah, take small steps, but make big strides. I guess
Yeah,
that's the mantra. So tell me, name one Indian founder who you think is absolutely killing it right now.
I think
And you can't say
I
Nitin
will.
Kamath because he's from your industry.
uh, I think so. I can't even say Vijay Sekhar. Then you're saying because he has
Because
taken
okay,
Paytm money.
exactly.
I think yeah, Vijay Sekhar is doing great. I mean, because the
Yeah,
story is important. I think Dipinder Goyal also Zomato's killed it, man.
yeah.
I mean, more than the fact that they've done IPO, but going through a journey which is in such a messy or unorganized restaurant business, building a delivery technology and then taking an IPO route. I know what must have gone through their lives. I mean, utmost respect for these people.
Dipinder Goyal and VSS. Wonderful. Let's see. Who's your favorite superhero?
Superhero. I mean,
Yeah.
I really like Indian mythology. Hey, Hanuman. I mean, as a kid, I used to believe that there's actually Hanuman in real life.
Many people still do.
Yeah. No, no. Even I
Uh,
believe. I mean, from a mythology standpoint, I definitely believe.
what's one thing that you would like to change about the Indian startup ecosystem?
On the investment side, a lot of patient capital should come to build something which can create real global value. I mean, we cannot be short term in terms of the money that gets deployed. Obviously, the outcomes could be enormous because if you build something with patient capital, it can scale really fast. And the
True.
second thing is founders need to focus more on. I mean, especially tech led businesses. I mean, whether you're a non-tech or a tech founder does not matter. The aptitude to build businesses around tech has to be led by very technological in that sense. So which means that it's not growth at any cost. You build right, you do it right. I think the success could be better. Like the success rates improves. I mean, so I think yeah.
And let's see, I've got two more questions for you. What skills or traits does one need to build a successful company?
I think
Let's say name two. Name two traits
yeah,
that a person needs to
like
build a successful company.
brutal perseverance, man, to execute. I mean, you have to every single day. You know that you have to execute the problem that you have at hand. I think that's one thing. The second thing is ability to actually hire great talent. Like, I mean, it's you cannot build your company alone, so you need to have people who are equally passionate like you. So if you have those people around you and you are aligned to the same vision, I think you can build a great company if you have these two things.
That's a really good one, actually. That that the ability to hire talent and to retain talent. I think hiring is the easier part. Retaining is, I think,
Yeah,
the difficult part. If you can do that, I think that you can really create wonders. Because I think after a while, um, once you've had someone with you for the first 2 years, then you start doing things at the speed of trust, and I think that
right.
really changes the dynamic completely. Cool. I'm going to ask you, what's one lesson that you had to learn the hard way?
That okay, that's a conflicting question, but like it could create conflict. But yeah, the it's like to do businesses in India, like as a tech entrepreneur, you really need to be really good with many peripheral things. Like it's not easy. I mean, if
No,
you
no, trust me.
really don't know,
Kailash Katkar from Quick Hill was on the episode, and we went through an entire episode of what it really takes to build a tech business in India.
I
So
mean, yeah,
be candid.
yeah, so I mean everything like the ability to negotiate deals with your partners, the legal ecosystem, the regulatory compliance ecosystem. It's not simple. Like there's a lot of gray area in every aspect, and you have to maze through all of this. Just not thinking that let me just be a great innovator, but yeah, to learn the hard way. I think so. I think that's one thing. If India's gets more formalized, I think these things will get really better and better.
Hmm.
And I think we are getting there. But yeah, I mean, 2016 when I started, I was not that like. I mean, 21 is a very different story.
Very true, though. Very true. I mean, India teaches you really how to do business. I think once you do business
Yeah,
in India, you can do business anywhere in the world. I think it's just simpler. Uh,
right.
cool. Are you somebody that reads a lot, or are you somebody that follows podcasts? Like, what's your poison in that sense?
So right, I read a lot. I'm not in too much into podcasts, so I read a lot, and I read very not like not. I mean, at least for last 1.5 2 years, I've not been reading books, which I used to read a lot of books. I mean, you might see, but right now I read a lot of contextual stuff around like
So,
businesses
what
and
are
all. I mean,
three
I've
books that you would recommend? Like, what are three books you would recommend to, let's say, a founder
to
who's just
found
getting started?
honestly like reading about other founders, and this is not around a book, but I have honestly actually, I mean, obviously you asked me not to name few people, but I have followed some founders and I've really learned a lot from
No, no.
them.
Now
And
you can
it's
name
about
them. It was only for that question. Now you can name them.
okay, so I think I followed Nitin Kamath a lot, like the when I was building up, and I could see how the technology lens around broking and how they've architected this whole thing, and I really got influenced by that, and I read a lot about how they're built, and I think even other founders, and generally I have actually tried to like like follow minute details about how founders have taken their companies, and these are not like what you get in the books. I mean, especially see I have to be very practical, so actually wanted to have more practical knowledge. And typically what people say na B school nahi gaye to aap business nahi kar sakte, but actually as an entrepreneur what matters is actually you have to have a practical business understanding. And I think this is the real people who are solving real problems and building real businesses. I tend to read whatever they are writing, so I do that a lot now.
Wonderful, wonderful. Ujjwal, I think we're at the end of rapid fire. I know there's a couple of questions. I'll just take one, which is more relevant because of talking about wealth. This is from Amrit Satpathy. Amrit asks a very interesting question. He goes, if the government decides to change any policy at any point of time for any sector and the sector stocks become half like what recently happened with some sectors, he hasn't named sectors, but how do we overcome the situation? What's your view on the same?
So this is a market linked question. So I think if you individually are invested in that sector, then you need to see if the fundamentals have changed with that policy. I mean, if and at times, if you look at solar energy sector, for example, if you're not talking about suddenly the tariffs went through the roof,
Yeah.
raised to zero, and a lot of energy companies. I mean, I know in listed space got really raised so much of debt capital they couldn't serve the interest cost, and they are like in a bad shape. And the government policy was to actually ensure the solar tariffs go low. I mean, so you need to really see that if the fundamentals of that sector could change, it could be that you have to move from a bullish view to a bearish view, and you have to maybe cut short your losses and just go out instead of making it zero. So at times, if you are very concentrated in your portfolio with specific stocks, but if you have diversified in a sector, because WealthBasket do that very well, so so in that case, some stocks might get impacted, but overall portfolio managed by the manager ensure that basis this policy, what needs to be done with the portfolio, it will be done right. So yeah.
Wonderful, Amrit. I hope you got the answer to your question. Ujjwal, if there was one way for some people to reach out to you with their queries about investing, what's the best way to reach out to you?
I think they can tag me on a LinkedIn DM or a Twitter, or and I'll definitely reach out to respond back.
Wonderful. Ujjwal, well, thank you so much. I didn't even realize it's been 70, 71 minutes since we've been speaking. We're already over our time, but is there any final thoughts you have for the audience as they sign off for the night?
So yeah, I think it depends. I mean, what kind of people? If they're founders mostly, then it's all about. Then one thing I could say that, I mean, every startup has its own story. So it is very important that we really don't get influenced by that. If they have followed this trend, I have to follow. It's sectors are different, the dynamics are different. So every startup every has its own story, so entrepreneurs need to focus on their story. So that's for the founders. For most of the other people who are there, I think if they are investing in equities, I think India is at the cusp of a different trajectory when it comes to growing as an economy. So I think everybody should participate in capital markets, and open a broking account, get into real
Let me ask you a
portfolio.
question. Do you see 100,000 Sensex in the next 2 years?
I don't know. It could be, it cannot be, but I know one thing that yeah, if you stay invested for 2 3 years, you're gonna make decent amount of money.
Wonderful, wonderful. Very, very, very nicely sidestepped, by the way. All right, guys. Thank you so much as well. Really enjoyed the conversation. I mean, like I said, your journey is so different because you've been connecting the dots going forward. You've been somebody that has something as a mindset and and what's very interesting is you've persevered and you've decided to, really, really put everything you had behind it. And I think every bit of success you get from here on onwards and everything you've got till now, you truly deserve it. So thank you so much for your time tonight, and thank you everybody for listening in. We'll be back in a couple of weeks with a new entrepreneur. We'll be back with some new content. It'll be episode number 50, and we'll be doing something pretty interesting at the time. Thank you so much. Good night, everybody.